Okay. Am I audible? Hello?
Yes, I'm here.
Okay. So our next chapter is statement of cash flows, right? 17th chapter.
Mm-hmm.
Okay. It's a bit lengthy chapter. It's much more difficult than all of the other chapters that we have seen so far. Okay. But the when you get the basic logic, it's simpler. Okay.
Mm-hmm.
Okay, let's start. So cash flows by the name itself, you can make a note that whatever happens is purely related with the use of cash. Clear?
Mm-hmm.
Okay. So that means we mainly look towards whether or not the cash is going inside the company or whether the cash is going outside of the company. Okay.
Mm-hmm.
So this cash coming inside and cash going outside could be termed in a single word called as inflow and outflow. Understood?
Mm-hmm.
Okay.
Mm-hmm.
So when I say cash flows, the basic logic is very simple. Okay. Whatever inflows that we have got, inflow, you're going
Mm-hmm.
to add it. Clear?
Mm-hmm.
And whatever outflow there is, you're going to deduct it. Understood? That is the basic logic of cash flows. Okay. So cash flow doesn't have a debit credit perspective. It just have two perspectives, whether the cash is coming in or whether the cash is going out. Clear?
Mm-hmm.
Okay. And
Mm-hmm.
the standard that deals with cash flows is IAS 7. Understood?
Oh, okay.
Okay. And this is probably the last standard that you're going to study. From for the next chapter, you're not going to name any standards. You're just going to study it as a consolidation. Clear?
Mm-hmm.
Okay. So IAS 7, statement of cash flows. So cash flows are basically used so that you can make out what the company's liquidity and solvency positions are, whether the company has enough cash with them, whether the company is able to pay its current liabilities. Clear? Okay.
Mm-hmm.
And cash flows could also be taken in order to understand what is the financial standing of the company, whether the company is financially sound. Okay. Whether the company has to seek any alternative methods in order to raise cash. Clear? Raise funds. Understood?
Mm-hmm.
Now,
Mm-hmm.
this is also used so that from the cash flows that has been prepared for the current year, you can actually extrapolate or add the inflation rates and stuff and give and get a cash flow forecast out of it. That is the future cash flows. Clear?
Mm-hmm.
Understood? And predicting the future cash flows is very important because only then would you understand whether or not your company has the capability to pay back your debts. Understood?
Mm-hmm.
Okay. So the basic format of the cash flows is here. Okay. You may copy it down. Understood?
Mm-hmm.
This one. This is the basic formats. Before copying it down, let me say the cash flows are divided into three parts. Okay. The first
Mm-hmm.
part A is cash flow from operating activities. Clear?
Mm-hmm.
The B part is cash flow from investing activities. Clear?
Mm-hmm.
And the C part is cash flow from financing activities. Okay. So, in order to
Mm-hmm.
simply put what are cash flow from operating activities, if you are going to take in accounts of whatever happens in the business on a day-to-day basis, that is an operating activity cash flow. Clear?
Mm-hmm.
Example, depreciation, the current assets and current liability movements that we'll study later on. Clear?
Mm-hmm.
And cash flow from investing activity is related with non-current assets. Okay. So
Mm-hmm.
whatever we sell, we purchase, and we make money out of the non-current assets, it is shown in cash flow from investing activities. Understood? No?
Mm-hmm.
Okay. Last one
Mm-hmm.
is cash flow from financing activities. So this relates to the funds of the business, that is the capital employed in the business. And in the previous chapter, I have told you two sources are from where the business sources funds, right? That is debt
Mm-hmm.
and equity. So whatever movements that are there in the debt and equity, the difference is taken in cash flow from financing activities. Clear, no?
Mm-hmm.
Once all these three parts are done, you're going to add all of these three things together. Understood? This one, and this one. Clear? And that is called as net increase or decrease in cash flow. Clear, no?
Mm-hmm.
So if it is a positive amount, it is called as an increase. If it is a negative amount, it is called decrease. Clear?
Mm-hmm.
Now, how do you know whether or not you have prepared the CFS accordingly? Or how do you know if your CFS is accurate? You're going to add opening cash and cash equivalents to it. Clear? Okay?
Mm-hmm.
Hello?
Yes, I'm here.
Okay. So for the net increase or decrease in cash and cash equivalents that you have found, you're going to add the opening balance from your FS onto it. Okay. And if I've done everything right, you are to get the closing cash flows that is shown in the FS. Understood? That is how you know whether or not you have done it correctly. Understood?
Mm-hmm.
Okay. Now, there are these are some definitions that is being given here. Okay. Cash generated from operations is something that you use in cash flow from operating activities. Okay. So cash generated from operations is basically cash flows before you adjust the interest and the income tax. Understood?
Mm-hmm.
Okay. And that happens in operating activities because it's a day to day thing. Clear? It's not a
Mm-hmm.
one time thing, it's a day to day thing. Now, the basic definitions: cash means cash in hand, cash at bank, demand deposits, everything is cash. Okay. Cash
Mm-hmm.
equivalents means those things that you can actually convert into cash. Okay. Is called cash and cash equivalents. So, both of them together, cash and cash equivalents. Understood? Now,
Mm-hmm.
as I've told you earlier, cash flows are two types: inflows and outflows. Clear?
Mm-hmm.
Okay. Now, when you are talking about CFS, there are two methods by which you can do CFS. Understood? There are two
Mm-hmm.
methods. And the two methods are direct and indirect method. Understood?
Mm-hmm.
Okay. So direct method. So this is when you have when you're going to find the cash flow generated from operations. All right. So there are two
Mm-hmm.
methods by which you can find the cash flow generated from operations. So in FA, you're going to study both of the methods, but once you are in the F level and P level, you're going to only study the indirect method. Understood?
Mm-hmm.
Okay. For FA, you're going to study both. Okay. That is why I
Mm-hmm.
told you I need 2 days in order to take this. Clear?
Mm-hmm.
So the
Mm-hmm.
first method is direct method. Now, what is a direct method? So in direct method, we know that the cash flows, that is cash flow format is like this, right? You have cash flow from operating activities where you have cash generated from operations, right?
Mm-hmm.
So in order to find this cash flow generated from operations, there are two methods that you can follow. Okay, one is direct, the other is indirect. Understood?
Mm-hmm.
Okay, so direct method is when you're going to take all the payments and the receipts directly from the FS. Understood?
Mm-hmm.
All the payments and receipts that you take directly from the FS itself, it is called as a direct method. Understood? That is from the accounting records, you're going to take all the payments and all the receipts that you get. Okay. So what are the
Mm-hmm.
payments and receipts that you get? Okay. These are really in the form of three things. One is the sales. Clear? That is when you
Mm-hmm.
sell your goods to customers, you get cash from them, right? Cash sales.
Mm-hmm.
The second one is purchases. So when you're going to pay your suppliers, the cash goes out, right? And remember, for sales and purchases, always take cash sales and cash purchase. Understood?
Mm-hmm.
For wages, for in order to employees, in order for the employees to work for your company, you need to pay them by cash, right? So whatever wages that you get, you are going to take it. Clear, no?
Mm-hmm.
So example of the accounting information is given here. Okay. They have been given an SOFP, right? And they have
Mm-hmm.
also given an SOPLC here, right? And there
Mm-hmm.
is additional information here that is given as the current liability, what are there in the current liability, right? And
Mm-hmm.
the purchase invoices of non-current assets. Okay. And they have told you to calculate net cash flow from operating activities using the direct method for the year ended 31st December 2007. Clear?
Mm-hmm.
Okay. And for operating activities, I've told you you're going to take directly the sales, directly the purchase payments that is being given, and also the paid wages, right? So that is called a
Mhm.
direct method. Understood? This is
Mhm.
relatively very simple because you can take things right away, but there is a bit more difficult question that we would deal in the next that we would deal the next time. Okay, clear?
Mhm.
Just okay. So from the details above, they have given you SOPL and SOFP information, right?
Mhm.
And I am telling you again, for direct method, in order to find cash generated from operations, you need the payments and the receipts that you get and you pay, right?
Mhm.
Okay. So here they have given you the receivables balances are like this, right?
Mhm.
They've given you the receivable balances as this, okay?
Mhm.
But they haven't actually told you how much of these receivables that you got, right?
Mhm.
Okay. And remember, it is 2006 and 2007. Clear?
Mhm.
So the opening balance is this, the closing balance is this one. Clear, no?
Mhm.
And when such a detail is given, you're going to take the entire revenue as a credit sales. Understood? Because there is limited information. Understood?
Mhm.
And also, in case of inventory, the entire purchases would be credit purchases. Clear? Always keep this in mind. Understood?
Mhm.
Okay. So, so here we are going to take this as balance brought forward. Clear?
Mhm.
Understood? No? So I have taken this here. That amount 265,840. Clear?
Mhm.
And simultaneously, you have got the balance carried forward, right?
Mhm.
Clear?
Mhm.
So you're going to take that as well here. Understood? Balance
Mhm.
brought forward, that is the opening balance, and the balance carried forward of 346,000. Clear?
Mhm.
Now, you're going to assume that whatever revenue there is, it is a credit sales. Clear?
Mhm.
So, credit sales is something that increases receivables. Understood? So, you're going to take credit sales here. Okay? Now,
Mhm.
you're going to total things down, both sides, and the difference that you get would be the cash receipts. Understood?
Mhm.
Okay, no?
Mhm.
This is the cash receipts. So, you got the cash receipts. You're going to fill that here. That is cash receipts from net receipts from customers. Understood?
Mhm.
Okay. Now you're going to move on to the payables account. Okay. Payables also same thing. Here you have got the current liabilities. See?
Mhm.
Understood.
Mhm.
And I think there is a little more. So here, sorry. Here. They've given you the trade payables as this much, right?
Mhm.
Current liabilities. So this is the opening balance, right? This is the closing balance. Understood?
Mhm.
So you have filled the opening balance as 210564. That is payables account on the credit side brought forward
Mhm.
and carried forward as 258,240. 258,240. Clear, no?
Mhm.
Same way, you're going to assume that in the SOPL, whatever purchases is given, it is of credit purchase. Understood?
Mhm.
So credit purchase, what does it do to the payables? It increases payables, right? So credit side. Understood?
Mhm.
Okay, no?
Mhm.
Understood?
Yeah.
Okay. So there is an additional thing that is given. That is, it is operating activities, right?
Mhm.
So whatever operating cost that is there would also be taken as a payables. Understood?
Mhm.
Clear.
Mhm.
So together, how much does it cost? The amount that is 1105830 plus 960,777. Understood?
Mm-hmm.
So together it is 1201907. Okay. Now you're going to
Mm-hmm.
do the old method. You're going to total both the columns down. Okay. And the cat and the balancing figure that you get would be taken as the bank payments. Understood?
Mm-hmm.
Clear? So this
Mm-hmm.
is the payables, net payables. You're going to take that here, net payments to suppliers. Understood now?
Mm-hmm.
Okay. Next is payment to employees. So remember always for direct method, you have cash sales, you have cash purchase, and you have wages and salaries. Understood?
Mm-hmm.
Okay. So here again, we're going to take the account wages and salaries account. They've given you the opening balance, right?
Mm-hmm.
The closing balance. You're going to take both of them here and here. Understood?
Mm-hmm.
Okay, now since
Mm-hmm.
it is an accrual, you're going to take it on the credit side. Balance brought forward. Okay?
Mm-hmm.
Because you're going to assume that this year you're going to pay them up, right?
Mm-hmm.
And in the year end, it is 14650. So instead of paying it by bank, you're going to keep it as an accrual. So accrual carried forward. Okay, no?
Mm-hmm.
So there is a difference. So that means there must have been something that was paid off, right? And you
Mm-hmm.
know, in the COS, in the question itself, they have given you wages and salaries of 145,900. Clear, no?
Mm-hmm.
So that increases wages and salaries by 145,900. Also, here they have given you a separate called salary. Clear? So you're going to
Mm-hmm.
take that here as well. Understood? Now,
Mm-hmm.
the whole thing. You're going to total both of the columns together, and big total minus small total would give you the wages and salaries that you paid in the current year. Understood?
Mm-hmm.
So you're going to take that here. Okay. And then you're going to add all of them together in order to get the amount. Understood? No?
Mm-hmm.
Clear? So this is
Mm-hmm.
called as a direct method. So always remember for direct method, all of these things will be there. Clear? That is the sales, purchase, and the wages and salaries. Understood? No?
Mm-hmm.
Okay.